everyone, welcome to the Money Show, NSE Prosperous India special. I'm Mubina Kapasi, and this show is of course all about your money and your personal finance. 30 minutes dedicated to you, and we are going to bring you market's top financial experts to answer all your financial queries as well. Well, of course, the big headline for today is the RBI action. Not only have they cut the repo rate by 25 basis points, but they've also changed the stance to accommodative. Yes, big words undoubtedly, but what's the impact of the action taken by India's central bank, that's the RBI, on your money? How does it affect your own personal finance parameters? And what exactly is it that you must pay attention to? Let's understand the same. We have with us Navin Chandani. He is from bankbazaar.com. Hi Navin, good evening. Thank you for sparing time out for us on the Money Show. The biggest impact, of course, of any sort of interest rate cut that is felt on those guys who've taken loans from the bank, be it for personal finance purposes, home loan purposes, so on and so forth. So first, if you could just explain to our viewers why they should watch out for the RBI action, which comes out bi-monthly, and of course, what would be the impact on their loan figures and their interest expense as well.
Hey, thanks for having me over here. Good evening, all viewers. So RBI today, like mentioned, has reduced the repo rates by 25 basis points. What does that mean? It means for us, all those who of us are servicing loans, may it be a personal loan or a home loan, these are given by banks or lenders. Now, if these banks and other NBFCs or fintech lenders actually follow it up with a particular reduction in their rates of interest, and for example, if you have a home loan which has a reset date which is close by, that benefit can actually be accrued to the individual lender. So let's take an example. If you are servicing a 50 lakh loan for a period of 20 years, you would be paying approximately 55.7 lakhs at a rate of interest of 8.7%. Now these 25 basis points which has been reduced, if 10 basis points of that is transferred as a benefit to you as a consumer, in your 20-year tenure, you would be saving up to 80,000 rupees. However, if the lender, that is the bank, NBFC or fintech, actually transfers the entire 25 basis points, you could save up to 2 lakh of rupees. So the benefit will accrue to you after the bank actually follows the RBI reduction, and it depends on how much of that is actually transferred to you as an individual.
Okay, well, yeah, that's the reason why the RBI policy impacts almost everyone's lives, because whether you have a loan account or you have a fixed deposit, it is something that is going to impact you. Though, of course, banks have been a bit slow when it comes to transmitting these interest rate movements, by the RBI. But of course, if you have any questions or queries, whether you want to refinance your loan, whether you want to take a new loan, whether you should wait a little longer, send in your questions. The number is appearing on the top of your screens. You can call in live right now, and we will have Navin answering questions and queries. For now, we have some emails that we have received, so let's get to answering those. Sudha Arora from Delhi has sent in a question. Sudha says, we have got a home loan for 8 years only. We would like to make as much of a prepayment as is possible before my husband retires. Is it advisable to do so? Should we reduce the tenure of our EMI? And also, is it advisable to switch our bank? If yes, what should we keep in mind? Navin, what would you recommend Sudha do? Does it make sense to do a prepayment at this point?
So yes, Sudha, if you have extra funds, it's always good to make a repayment. In fact, most of the banks today or lenders today do not charge you for a prepayment. So I think that's something which is good to know. A prepayment always helps because it reduces the interest burden across the years that you are actually servicing this loan. Also important, as you asked, it's always good to reduce the tenor of the loan rather than reducing the EMI. Reducing the tenor of the loan actually helps because you're prepaying faster. So I would always suggest prepaying only if it does not make you financially tight. So if you have savings today, it makes sense to prepay. It doesn't matter in which environment it is. It doesn't matter if the interest rates are going up or going down. It is always advisable to prepay if you have extra funds.
Okay, and yeah, you know, it's still not in the Indian culture, essentially the banking culture, to sort of charge a penalty or an interest on prepayment. This is something that I suppose is a Western culture of financing, or rather Western culture of banking, where you are charged a penalty when it comes to prepayment. I think at this point of time, looking at the liquidity crisis, banks do want you to prepay. So I don't think we're going to be facing that problem anytime soon. So yes, so that do prepay if you have the cash in your hand at this point. You want to add? Yeah, go ahead, Navin.
Yes, I would like to add, now when it comes to refinancing, I think the question also had a mention about refinancing. In refinancing, there are a couple of things that you have to keep in mind. When you actually refinance a loan, there could be a processing fee, there could be a legal fee. Those fees and charges is something that you have to keep in mind. So do not always opt for refinancing without evaluating what are my extra charges if I'm moving from one lender to another, from one bank or an NBFC to another. So always be cautious, read the terms and conditions of what you will end up paying when you actually move from one bank to another.
That's a very important point. Yes, in some cases, people may not be having the money right now to prepay, so they would be tempted to refinance because your new loan may be coming at a lower interest rate. But there are a lot of ancillary expenses that one must take note of. It may just erase all those interest differential gains that you may be enjoying if you switch your bank, if you refinance your loan. Okay, we have a very first caller, Mr. Chandrasekhar from Hyderabad. Good evening, sir. What's your question?
Yeah, I used to know regarding the car loan.
Okay.
I just have taken a car loan. Will this repo rate affect my car loan? Like, will it come down, or can I refinance this car loan? I used to know this. Taken from one of the private banks.
Okay.
My car loan. Yeah.
All right. A very valid question, Navin. What would you recommend he do?
So as I understand, you have a car loan and you want to see whether you should be refinancing. That is what you mentioned?
Yeah, I've taken a car loan very recently. I wish to know, since the repo rate has come down. Hello.
Right. I think it is important to check whether the car loan that you have taken, is it recent or when was it taken? How much more time do you have to service? What is the tenor of this particular loan, and what is the differential? Because the repo rate has just come down. My recommendation is to wait and watch, understand what reduction is going to be transmitted back to consumers. So for example, if your interest rate today is say 10.5% on the car loan, if it is going to come down by only 10 basis points and you have only 1.5 years left to actually make repayments, it may not be advisable to refinance it. It might be better to just continue with it. So it depends on how much is going to be the reduction in your interest rates by your lender, as well as what is the tenor left by you to actually service that particular loan. So these 2 points are important before you make your decision. In addition, you should also keep in mind the cost that you may have to pay when you actually refinance it. For example, there will be a legal charge, there will be a processing fee. So keep in mind all those costs. Possibly use an EMI calculator after putting all this together and then make your decision.
Well, yeah, if you have a shorter term loan, I mean, which you have to pay off, in the next 1 year or, it really doesn't make sense to refinance it, because by the time the banks as well will transmit this interest rate cut to the consumer, it may be time you may have already paid off a significant amount of your loans, So by then there's really no significant benefit that you may attain to sort of to refinance your loan. Chandrasekhar, I hope that's been able to answer your question. Just like Chandrasekhar, if you have any questions or queries on how this RBI repo rate cut impacts you and the loans that you have taken, call in. The number is appearing on the top of your screens. Okay, for now, let's just get to more, email queries that we have received. Rajesh from Trivandrum has written in to us. He says, I've taken a home loan from HDFC Bank on a fixed rate of 10.25%. My manager tells me that I should refinance it because interest rates are going to drop. Do you recommend to do so? Unfortunately, in this case, Rajesh has not really mentioned what is the duration of, his loan. And, like Navin has been reiterating, it's important that you consider the duration component as well when making such a decision. But yeah, Navin, let's go with the assumption that since it's a home loan, it's definitely going to be a longer duration loan. So you advised Chandrasekhar in his car loan to sort of be patient. What would you advise Rajesh to do with his home loan now?
I would say the same thing. Let's start off by first seeing what is going to be the reduction in the home loan rate. What I understand right now, the current home loan that he has is a fixed rate, which is at a 10.25%. If there is an option to consider from what I hear, he spoke to his manager at the bank. I'm sure HDFC Bank also has a variable option that is available. I would highly recommend to wait and see how much of this 25 basis points is actually getting transferred back to the consumer in a reduction in their home loan. Then actually evaluate the variable home loan interest rate. Understand what is the savings, and like you very rightly said, it's a home loan, so most likely it's going to be a longer tenor. Also understand once you are moving from a fixed to a variable, there will be again a processing fee, legal charges, and a few other charges that you will have to consider. I would highly recommend that you go back to your manager in the bank and say, yes, how much of this is actually going to come to me as savings. Keep in mind that a variable interest rate is always good in a falling interest rate regime, which we have seen in the past. So once you keep that in mind, keep a horizon of the next 5 years, do the calculation, use the EMI calculator, work with your specific manager in the bank, evaluate this variable option, evaluate what you're currently paying at 10.25 for the next 5-year horizon, and then make a very informed decision. It is always usually advisable to go in with a variable option, and that is what I would recommend in the long term.
Okay, advice to go with the variable option. Yeah, the RBI as well has kept an accommodative stance, so there is a possibility we may be looking at more interest rate cuts. Okay, we just have received an email query. Nelson writes in to us saying, I have a 20-year loan with Axis Bank, and despite the reductions, I'm still charged 9% interest. It's not a fixed interest loan, but a flexible interest loan, like you were just flagging off Navin, variable interest loan essentially. Do you recommend moving my loan to another bank? Well, it's a fair question, really. And Navin, I think a lot of loan holders may be asking that question that, hey, why can I not see the impact on my interest expense? But I think that's really the point, right? Transmission of these interest rates cuts has been quite slow.
So you're right. I would again not be in a hurry. I think I would recommend Nelson to actually reach out to his banker. Read also the agreement that he has signed. Typically, what happens is the reset of the benefit of a reduction or a hike in interest rates on a home loan has cycles. It could be a 3-month reset, it could be a 6-month reset. It depends on the terms and conditions that you have actually signed up for. So for example, if the interest rate reduces today, the benefit will come in the next reset date. That reset date could be probably, in the next 1 week, or it could be in the next 2 months. I think that is one thing that you need to understand. You will get the benefit because you had taken an option of a flexible interest rate. So that's very, very clear. But just understand, basis the terms and condition you have signed, there is a specific reset time period. Is it actually 3 months, 6 months, and you will get that benefit. So I would not be in a hurry to actually move to another lender. The other thing you have to keep in mind is if you're getting 9% today, it also is basis your relationship with the particular bank. They have also seen the credit history and offered this to you. So I would actually first recommend going back, seeing the terms and conditions, understanding whether this benefit of reduction is actually coming to you, and if you're happy with that. If you are not happy with that, only then you go and actually check whether basis your credit history, is there another lender ready to provide you a lower rate of interest. And again, as I always keep saying, keep in mind that there will be a cost in refinancing, in moving from one lender to another. There will be these processing fees, there will be these legal charges. Again, be very informed before you actually make that move.
Okay, well, several factors to take into consideration before you just simply want to go up and change your bank. And yeah, of course, that reset period when the interest rate will change is as well something that you must discuss with your manager. Okay, you know what, we'll do one thing, we'll just take a very quick break right here on the show. Remember, we are discussing everything to do with the RBI rate cut and how it will impact your money. This is the Money Show, NSE Prosperous India special. Back, you're watching the Money Show NSE India Prosperous special, where we were just discussing everything to do with the RBI rate cut. We had a whole host of questions and queries as well answered, and I'd appreciate Navin as well joining in on the show to answer that. Thank you, Navin, for that. Well, yeah, the key takeaways, of course, from Navin were: don't be in a rush to refinance your loans. Be a bit patient, because there are lots of ancillary costs as well associated with switching your loan, with refinancing your loan. Of course, if you do have extra cash, it's always a good idea to prepay your loan off, because your interest does decrease. So those were some key takeaways from Navin. Well, let's talk about the other big news that has impacted mutual fund portfolios significantly. Just take a look at DHFL. The stock price tanked. This is because rating agencies have downgraded the commercial papers. Now, big words, but what exactly are the implications on your money? DHFL's commercial papers and its debt bonds are bought by mutual funds that you own, debt mutual funds in particular. You just had a list of all of those mutual funds that do have the highest exposure to DHFL, and those are the funds that you should be wary of. UTI mutual fund has an 1843 crore rupee exposure. DHFL's mutual funds, of course, have the hugest amount of exposure. Axis mutual fund has a 368 crore rupee exposure. Reliance mutual fund 1138 crore rupees. All of these mutual funds have seen a hit come by in their NAVs. In fact, some mutual funds have tanked almost 50% on an overnight basis. NAVs have been halving. Debt funds have taken a big knock. The question is, should you be worried? Well, first up, let's just go across to my colleague Jayesh Khilnani to understand which mutual funds have a sizable exposure to DHFL and what sort of a tanking have their NAVs taken. Jayesh.
If you have a look at the entire mutual fund industry, there are about 22 mutual fund houses that have exposure to DHFL, and there are about 165 schemes in which DHFL, as an entity is present, wherein about 105 odd schemes are such that they have more than 5% exposure of their net assets in the company as well. Now, if you talk specifically about the debt schemes, the overall mutual fund exposure to DHFL's debt stands at about 6,700 odd crores, which is primarily led by UTI mutual fund at about 1,850 crores. Nearly 1100 crores or 1150 crores is with Reliance Mutual Fund, where you have Axis Mutual Fund at about 400 crores, and you have some of the other smaller names like a Tata Mutual Fund, Baroda, Sundaram Mutual Fund, L&T also, which have anywhere between 150 to 300 odd crores exposure. And towards the end, you have some of the larger names like L&T Mutual Fund and Kotak Mutual Fund also, which have exposure in excess of about 100 odd crores. But the key aspect over here is that I have been talking to a lot of financial advisors, and most of them have told me that investors should stay put, because you have to understand that what has happened with the interest rate payment delay is that there is a delay in the interest rate and the asset has not gone bad. So the financial advisors have asked investors to stay put for now.
Financial advisors have asked mutual fund investors stay put for now. It's just a delay in the payment. Don't jump the gun. Don't try to redeem your mutual funds. And of course, any questions or queries, send in on the Money Show, because tomorrow we are going to be discussing everything to do with debt funds. They are not as safe as you may think. They do have a risk component involved, and that's clearly been witnessed as these debt funds take a big knock on the back of the downgrade on some debt papers. Okay, well, that's for tomorrow, but today and this week, in fact, is also World Environment Week. Every little bit that you do does save Mother Earth. Here's how, in fact, you can save money and nature as well. First up, just a simple replacement of your light bulbs and replace it with LEDs. Reason being, light bulbs do consume more wattages of power compared to LEDs, so automatically your electricity bill will reduce. Imagine if you do that for your whole house, it certainly will cut down on that electricity bill significantly. One very obvious method of saving the planet is also opting for carpool. One Uber ride for almost about 8 kilometers, or let's say 5 kilometers, will cost you approximately more than 150 rupees. A simple carpool of even 2 people will save you 75 rupees. On a daily basis, that's a substantial amount of saving, and not to mention you're cutting down on the pollution and carbon addition to the planet as well. Thirdly, 5-star rated appliances. The reason being, they're simply more energy efficient as compared to lower star rated appliances. So naturally, energy efficiency means less power consumption, which in turn, you will see the benefits at the end of the month when you will get the electricity bill. So that's when you will be saving money as well. And finally, carry your own water bottle. Don't go out and buy a plastic bottle, because it takes it just takes a couple of minutes to make, but it stays on the earth, stays underwater for millions of years. It does not decompose, and it's something that certainly does harm the environment. So very simple steps on how you can not only save Mother Nature, but also your money. Well, on that note, we'll wrap it up on this edition of The Money Show. But like I said, tomorrow we are going to be discussing everything to do with mutual funds and debt mutual funds, more specifically, given the fact that those are the ones that are in trouble. All your questions and queries, send in on The Money Show at etnow.tv. Call in live tomorrow, 5:30 p.m. Thanks for watching.